In this video, I'd like to consider the proposals made in the Labour Party manifesto in relation to corporation tax, income tax and capital gains tax as they relate or could relate to business owners. So when you set up a business, you are, like it or not, you are making kind of investment. In a lot of ways it seems, and it's a good thing around this, like a labour of love, but ultimately, apart from fulfilment that you can get from running a business you enjoy and do well in, you're looking to generate an income for yourself, presumably, ultimately maybe even make a gain from selling that business, from realising the value in that business. And they're the two things that underpin why you set up in business, in most cases in the first place. So when you look at the tax implications of what you're doing, of your trade, the impact that tax has does make a difference on how much you're left with, pretty obviously. And the first tax, if you're trading through a company, obviously, to consider is corporation tax. And what we see under the Labour proposals is generally an increase in corporation tax. They see the reintroduction, or they propose the reintroduction of the small companies rate for profits below 300,000. And that small companies rate will start at 19 and move to 19%, that is, and move to 21% by the year 2022. So then we're looking at the introduction of a higher main companies rate, the main rate of corporation tax, at 26% in 2022, with a gradual increase from the current 19% to that level. So quite material increases in corporation tax. And what that means, quite simply, is that if you're running your business through a company, the amount that you retain after paying the corporation tax is going to be less than it is currently. That's just going to be a fact, regardless of the size of your business. Now then the next bit is, well, how do you take your money from the company? You can take it by dividend or salary, and save for the personal allowance and the national insurance lower earnings limit, taking your money out by way of salary, it generally pays to take your money out by way of dividend as a shareholder, as a shareholding director, because you pay no national insurance. It's completely legitimate. Everyone accepts that. You can pay yourself a dividend. You're not compelled to pay yourself a salary, and it pays to pay yourself a dividend because there's no national insurance. Well, what we're seeing under the Labour proposals is, one, an all-round increase in income tax rates, but also the removal of the dividend allowance and dividends being taxed as income. And of course, the amount you've got to deliver the dividend is going to be less because more will have been taken away in corporation tax. And all of that thrown together means that for most people, taking your money out of the company by way of a dividend will no longer pay. And it will probably be better for you to take money by way of salary. Detailed calculations are necessary, but our early calculations are leading us to that conclusion. So how about if you come to sell the business? Currently you have entrepreneurs relief, and that's incredibly valuable. So if you satisfy the stated tests, which are not massively rigorous, you're a trading business, you've owned it for a couple of years, you sell the business, you are going to be looking at a 10% rate of capital gains tax, up to £10 million of gains cumulatively through your lifetime. The Labour Party and the Conservatives, by the way, are also committed to reviewing entrepreneurs relief, but the Labour Party has said we will get rid of entrepreneurs relief and will consult on what could replace it. We've had a number of versions of an entrepreneurs relief in the past, retirement relief being one of them. So they're not saying we won't have any kind of encouragement or tax incentive for people who build a business and sell it. One would expect the qualifying conditions to get a little tougher, to more closely aligned to working in the business as opposed to just on it, all of that. But the one thing you can be pretty sure of is that the rate of relief you're going to get is not going to be as attractive as it is currently. So all around, the environment for business owners under a Labour government, from a tax standpoint, looks likely to be less attractive. And that will impact on planning. It will impact on how you draw your money from your business, and it will obviously impact on your planning in relation to how much you expect to get from your business should you sell it, because that will factor into your future broader financial planning of how much income you need in a time of non-working, because you'll probably have a little less than you might do currently following the sale of your business. It's one of those things, obviously, we're going to watch. It is entirely dependent on the Labour Party being returned to power or having any influence on power. And of course, we're going to need to look at that entrepreneurs relief position, even if we have a Conservative government. So we will be keeping a really close eye on these developments, as ever. It's our responsibility to do that within TechLink, so I would encourage you to keep looking at that, and obviously to look particularly closely once we have the results of the election on the 12th and we know when the next budget's going to be, because we'll get an awful lot more detail on all of this stuff at that point.